Hello everyone and welcome to my daily hot market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 1st of November. It is non-farm payrolls Friday and we have a continuation really of this dollar negative move that we've seen since that Fed meeting. We've seen the dollar falling away quite sharply in the last couple of sessions really, and that's continued to an extent today. Dollar actually weaker across all of the major currency pairs, and that has sort of been driven by the move lower on bond yields, and that has certainly played into that dollar move. Volatility lower as well on equities, sort of bit of a flying around on equities yesterday with a bit of a safe haven move back into the market, and that didn't overly help the dollar either yesterday. Gold strongly higher, way back above $1,500. Silver sharply higher as well. The yen gaining considerable ground, actually now below 108 big figure, interesting, and at a key level there. I'll talk about the technical implications of that in a bit, but certainly in front of this Fed meeting, in front of this non-farm payrolls today, we've got the dollar which is still under pressure. Now what we're expecting from payrolls, let's have a look. 12:30, expecting 89,000 jobs on the payrolls number. Now that's way under 136, and obviously under 100,000 is never really looks great, but there's slight sort of distorting fact of a strike going on at General Motors to drag around about 50,000 jobs off that headline number, so that's affected there. Average hourly earnings coming in at 3%. That is going to be the focus because the Fed was saying in its meeting that inflation needs to pick up substantially, really significantly to generate rate hikes. So the average hourly earnings really does need to hold above 3% if that is to be the case, and it's expected just to tick mildly higher from 2.9 to 3%. Unemployment to stay just a tick higher at 3.6% is the expectation there. Now we've had a slight move back towards a risk positive market today. That's coming helped by the Cajun PMI, which came out better than expected for the manufacturing sector. That's the unofficial manufacturing PMI for China, and that better than expected. That helped risk positive assets, so the Aussie and the Kiwi are both stronger today. Other data points today, we've got the manufacturing PMIs as well. First trading day of the month, UK manufacturing PMI at 930, expected to be 48.1, so down from 48.3, so still very negative there. Also at 2 o'clock this afternoon, we've got the US ISM manufacturing data, a slight tick high, but again still in contraction territory there. Other than that, we've got some Fed speakers to take note of. You've got Richard Clarida, who's a mild dove, Randall Quarles, who's centrist, and John Williams, also centrist. Now they will be interesting because they sort of sit around there or thereabouts at the tipping point of the Fed. So how they come out will be interesting today. Right, so that takes me on to my chart today, which is dollar Swissy. Now, I've said that the safe havens have had a strong move, and the Swissy has certainly benefited on the back of that. Dollar under pressure as well, so subsequently dollar Swiss has been sharply lower in the last couple of sessions. And you look in the outlook of the fact that this is a range play for the past 5 months. The midpoint of that range pretty much is that 98.40 pivot line. Pretty much there or thereabouts, pivoting around that 98.40 level. So that is clearly a key support line. It's not quite gone back towards that yet today, but look at the momentum indicators falling away on MACD with a bear kiss below neutral. Stochastics accelerating lower, RSI sort of edging towards 40. So there is this deterioration in the outlook, which could well put pressure on that 98.40, and if there were to be a closing breach of that, you'd be suggesting that that's a top pattern. You could argue a head and shoulders, which would imply basically a move back towards the 96.60 level of key support. 97.95 is the next real support beyond 98.40. You can see on the hourly chart falling away. Negative configuration now on momentum indicators. Slight tick higher this morning. in the last hour or so, but anything around 50 tends to be an area where during this corrective phase the market has been selling into strength. You've got the initial resistance of the reaction higher from yesterday around 98.80 and then around 99.10 being a pivot line. So some resistance levels there overhead to play for, but certainly at the moment we're waiting out for payrolls, but the pressure is mounting with this corrective dollar move as well. So I wish you good luck in your trading for payrolls. As I said, payrolls is going to be key today, so we need to watch out for how markets respond to that this afternoon. But in front of that, I wish you good luck in your trading. Click here to subscribe to our analysis videos and also go to our website to sign up for our webinars.